It was Christopher Columbus. He was trying to invade another country, right? And they were up against the native Indians, whoever the local people were, and they had all these ships standing there in the back, and they were getting ready for an attack. And the guys were standing on the cliff. They were looking at the ships, but they couldn't see the ships, and they got taken out the next day. My question is, why couldn't they see the ships when they were there in plain daylight? It's because their brain couldn't recognize it. They'd never seen a ship before, so they had no frame of reference, so they literally couldn't see it. Now, I don't know if the story is true or not, but what's illustrative about it is that very few of us have been trained to be investors. So think about it. How many of you guys climbed into Facebook when Facebook just got started? You bought shares earlier and you minted out, or a Google or a WhatsApp or something like that. Has anybody ever participated in an opportunity like this? Nobody here. It's not because it didn't exist, right? It existed. Some people profited from it, but not us. Why? Because we've never been trained to see those opportunities. And we have never been able to see it. Why? Because we are skeptics. If anything seems to be better than 10 or 15% a year, immediately it's not good, right? So I started making a few conclusions for myself. And the first conclusion is that it's good to be a skeptic to a point, but not to a point where you're missing out on viable business opportunities. Would you guys agree with that statement? Yeah? So the next point that I came to is high yielding opportunities do exist. You've just got to find the right ones. But here's the real kicker. At what point should you participate in a Google or a Facebook or a WhatsApp? When do you make your money? Can you make the same amount of money now by buying stocks on the stock market in Facebook? You can't make that kind of multiple right now. When can you make it? Usually in the beginning, right? So it's at the start of projects. So here's the first bit of advice I have for you guys. It's not only at the start of new projects, it's at the start of new industries. If you think about it, Facebook pioneered an industry. And Google, in a way, they didn't pioneer it. Yahoo was first, but they did it better. They pioneered an industry. And WhatsApp pioneered an industry. So what I discovered is if you can find the right industry to back, and you can find the right player within that industry, that's when you can create enormous wealth. The trick is to find it. Would you guys agree with that statement? Okay. So, and there's a real cost for procrastination because like me, Doffy, I could have bought in at 13.56 and I go and buy in at 16.44. So that's my price for skepticism. 26% I paid more for the opportunity because I waited. So the biggest enemies of wealth is greed and fear. And I don't know if you guys have ever seen this, but Warren Buffett says that the smart investor knows how to manage both greed and fear. Let's start with fear. Why is fear an enemy of wealth creation? What happens when people are fearful? What happens when people are fearful?
They freeze.
They do nothing, right? They do nothing. When people are scared, they do nothing. And when people are greedy, they do what? Stupid things. So tonight, you guys are going to experience both emotions. And I know this because I've been presenting this little program for a while. I'm going to share with you guys what's really going down in South Africa. And you're going to experience the emotion of fear, I guarantee it. And then later on, I've got some good news, because not everything is going to be bad news here tonight. I'm going to share with you very simple and practical ways that you can not only protect yourself, but you can create international wealth. And then greed is going to kick in, I guarantee it. Because once you see it, you're going to want to participate in the entire thing. So I'm going to invite you folks, as you're sitting here tonight, to be aware of the emotions that you're experiencing, and don't try to change it, just be aware of it as it comes up for you, okay? The first disclaimer I need to give you guys is I'm an ordinary bloke. I'm not a qualified financial advisor. I'm not a member of the Financial Services Board. I'm not qualified to give investment advice. I'm just an everyday Joe. I'm just an everyday guy that works very hard to save money and that likes to see good returns on my money. And last year I realized that I lost half of my money, and I didn't know it until I saw the stats I'm about to show you guys tonight. So I'm just an ordinary guy that is looking at a solution to a problem that I had, and I'm sharing that with you guys tonight. But whatever you hear from my mouth, you have to go and verify. You've got to go and do your own research. Okay. But while we're on the subject, the Financial Services Board, a qualified financial advisor, who would agree that gold is a pretty good investment? We would agree with that, okay? Does anybody have a financial advisor that's ever advised you to buy gold? Anybody? Just have a look around the room. You know, I've now trained over 1,000 people on this concept. Not one person has ever raised their hand. If gold's a good investment, why has your financial services advisor never advised you to buy gold? Why not? What do you think?
They don't make comp.
Oh, there we go. They don't make commission on it. They don't advise you to go in properties and to go and buy other investment classes. What do they usually advise you to buy? To go and buy endowment policies and and put your money into unit trusts. Do you think the fact that they earn a commission from that has anything to do with advice? No, I'm not the sharpest tool in the shed, but I would hazard a guess. Okay, it's quite possible. And who do you think sits on the board of the Financial Services Board? The guys who own and run the pension funds and the banks and so forth. A little bit of self-interest, I think, hey? So while I'm not a qualified financial services advisor, it's probably a very good thing, because otherwise I'd be telling you about old mutual endowment policies tonight, and you would have already been asleep. So it's probably a good thing. But I'm giving you this disclaimer nevertheless. What I want to start tonight with is I want to share my own personal crisis with you. I want to share with you what I saw last year that I'd never seen this way before. I want to share with you a way of interpreting what's going on in South Africa. And the objective is not to scare you or to cause further despair. I know that many of us have lost hope in leadership. But I want you to understand the implication of what I'm about to share tonight when it comes to your money. Because that's the only thing you're concerned about tonight is your money and your own investments. So I'm going to share with you guys some information that's probably going to disturb you a little bit. And when you start feeling disturbed, just be patient with me, because I'm going to give you good news, and a lot of good news. But before we can get to the good news, we have to be able to look in the mirror and see what's really there. So you would agree with the statement that you can't really change anything until you're prepared to acknowledge exactly where you are right now. You would agree with that. In fact, I want to give you guys the best weight loss tip, weight loss tactic in the world. It works 100% of the time, but nobody does it. If you really want to lose weight and you want to be at your absolute goal weight and never change it again, simple. You go and stand in front of a mirror, a well-lit mirror, and you drop down to the neck, you're standing there stark naked, and you take a photograph and you print it out to an A1 and you stick it in your fridge. And I promise you, you will achieve your goal weight 100% of the time. Now, I'm not talking about one of those flattering mirrors. You know, you get those mirrors that make you a little bit thinner. I'm talking about the kind of mirrors that you get in a change room when you go buy clothing. I mean, what is up with those mirrors? Have you guys seen it? I mean, it's ridiculous. You know, you just go and stand in front of one of those mirrors and you take a photograph. It'll cure you of any kind of a yo-yo diet for the rest of your life. Why? Because you saw the truth and you were confronted by it and you printed it out so that you couldn't forget it, and then that corrects eating habits, right? And exercise habits that we don't feel like doing. All I'm about to do is I'm about to show you guys the mirror what's going on in South Africa. So let's get started. Buckle your seat belts and embrace yourself for a fun ride as to what's going on in the South African economy. So, what my friend showed me, he said to me, Neil, do you realize how much the rand depreciated over the last 5 years? I said to him, please enlighten me. He showed me, and I decided I'm going to draw current stats. So I drew statistics from the 25th of January, 2011, until the 22nd of January this year. I prepared this presentation on Sunday evening, and those were the stats. Now, I know the rand has recovered a little bit, and everybody got really excited until the budget speech yesterday, and then the rand fell again from 15.20 to 15.60, right? So this whole recovery is not going to last long. But here's where we were. On the 25th of January 2011, we started on 7.04 to the rand, and on the 22nd of January 2016, the rand was sitting at 16.44, the day I invested into this opportunity that I'm going to talk about tonight, which is a depreciation of 9 rand and 4 cents, and as a percentage, that is 134% over 5 years and 29 cents. And there's a little graph that shows you exactly where we were and where we were on that particular day. Now, when you look at a graph, you look at a trend, isn't it? You don't look at spikes. What sort of a trend are you guys seeing here? Do you see anything slowing down? No, we see it accelerating, right? So let's have a look at last year. How did we do last year? So we started on the 22nd of January last year on 11.48, the 25th of January, apologies. And on the 22nd of January this year, we're at 16.44. And that means we depreciated by 4 rands and 64 cents in 1 year. We depreciated by 43%, 43.21% in 1 year. Now, why is this significant? I'll tell you why it's significant and what my moment of clarity was last year when I saw these stats. Look at this. What was the inflation last year? Who knows what the official inflation was last year? Apparently it was 4.6%. I think it's the biggest load of crap. Did the price of food and living and all of that rise by 4.6% last year? What a load of nonsense. But let's say it's true. Let's just say, for argument's sake, it's true. For an investment to grow, you've got to beat inflation. Would you guys agree with me? Now, in South Africa, you don't have to only beat inflation, you have to beat the depreciation of the rand for your money to be worth anything in international terms. This is making sense to you guys. Now, if you were like our Minister of Finance for 4 days, Van Rooyen, he on Twitter, he told us not to worry about the rand because we live, not to worry about dollars because we live in rand. Okay, now if you subscribe to that kind of logic, then this is probably not the right program to be in, but I don't. Unless my money is worth something in international terms, it's not worth anything. Last year, our investments had to beat 47.81% to break even. To break even against the United States dollar. 47% in 1 year we had to beat to break even. That's not to make money. That's to break even in international terms. Now, many of you guys are investors. You guys have properties, you've got Kruger Ranch, you've got all sorts of stuff going on. Who's got an investment here that beat 47% last year? Anybody? Nice. Let's look at the kind of investments that we have and what did we fetch last year. So what is the safest investment that you can have? Like if you're really not into risk, what's the safest thing you can do with your money? Mattress, under the mattress, right? So then you're going to earn nothing on it, and because you don't trust the banks, you stuff it under the mattress. But if you put it in a bank, what are you going to get in a normal savings or current account? Yeah, 2 or 3% if you're lucky. If you put in a money market account, we've got to give 31 days notice. What did we fetch last year? I think the highest performing money market account last year was 6% or something like that, right? What's the next level up from there? Unit trust, very good, right? So what was the top performing unit trust last year? Who knows? What did we get? Allen Gray, top fund was 13% last year. Wow. And properties grew by what? Kai's a very big property investor. What did properties grow by last year, Kai? Grew by inflation. 6%. Now, the entry-level townhouses, as many of us buy, those grew by 7, 8, 9%. The homes we live in grew by 2 or 3%, right? So, and the stock market grew by how much last year? Who knows? It's about the same as the top performing unit trust, about 13%, somewhere around there. So if we're investing in stock markets, in money market funds, if we're investing in properties, and that's what we fetched, what does it mean?
We lost money.
It means we all got poorer last year. My moment of clarity last year, when my friend showed this to me, something hit me like a lightning bulb. And I don't think I've quite recovered from it, to be honest. I realized I lost half my money. I've been working a lifetime, saving and investing, and as you guys know, it's bloody hard, you know, to your discretionary income, saving and investing it. I realized I lost half of my money in 1 year. And I was not a happy camper. And that's what caused this personal crisis of mine. That's why I'm standing here tonight. I never planned in my wildest dreams to come and talk to you guys about finance and investment. I'm a business coach. That's my area of specialty. So this is my personal crisis. Welcome to my world. Now, we haven't seen it like this, have we? But we've been aware that things have been going south, but we've never seen it like this, right? Now, here's $1 million question. Is this about to stabilize? Is it about to get better? Is it about to stay the same? Is it about to get worse? What do you guys think?
Worse.
Who says it's probably going to get worse? Why do we say that? I'm asking a very sincere question. Why do you believe it's probably going to get worse? Depreciation of the rand's one factor. Good, nice. What else?
No economic growth.
No economic growth. Good. So this is where I really started understanding what's going on. My friend said to me, he said, Neil, do you understand what drives the growth of the economy? I said to him, to be honest with you, I've got a few ideas, but teach me. You know, he's a financial guy. And he showed me a couple of indicators, the biggest indicators of economic growth in a country. What do you think those are? What makes a country's economy grow? What are the big indicators? Employment, right? So our employment rate is sitting at what at the moment? Who knows? 26.8%, right? So we're going to talk about employment in a while. What else drives an economy? Unemployment rate, yeah, apologies. What else drives the growth of an economy? Where do jobs come from?
New businesses.
New businesses, right? When companies grow. Do you guys want to hear a shocker? According to SARS and the Department of Statistics, the amount of registered companies that we started with last year, so P2I Limiteds, companies that are VAT registered, companies that have bank accounts. So I'm not talking about street hawkers and that. I'm talking about formalized businesses. The amount of formalized businesses at the end of the year compared to the start of the year shrunk by 6%. There were 6% fewer businesses at the end of last year than in the beginning of last year. So if our economy in South Africa is not going to grow by more businesses, what could it potentially grow from? What else? What are the other options? Foreign investment. How did we do in foreign investment last year? Who knows? Last year we lost 74% of all foreign investment in 1 year. Read the article. Go Google it. Don't take one word what I'm saying as truth. Go and Google it. 74%. Do you have any idea how many billions and billions of dollars that is that left South Africa? No, who knows why all this money left South Africa? There's a thing called an S&P index, which basically says how safe is a country to invest in. So there's the International Monetary Fund, and they go and evaluate and grade countries based on economic stability, based on growth, etc. And the highest rating is AAA, and then it goes all the way down. Now, 2 years ago, we had the misfortune of being downgraded to one level below the very lowest that you can get. Now, they started warning us last year, we're going to be downgraded to a level this year called junk. And the World Economic Forum just took place in Davos last month, and they confirmed again, South Africa is going to hit junk status anywhere between May and June this year. Now, what does this mean for us? What does it mean for us? Would you invest your money into anything that's classified as junk? Why on earth would a foreign company invest in South Africa with junk status? Can anybody give me an idea? All right? So that's not good news, right? The rand is forecasted to be at 22.50. There's a little bit of hope that we saw over the last couple of weeks since the interest rates went up. I honestly don't have a lot of hope for, but I hope I'm wrong. I really do. I love South Africa. I hope I'm wrong. Guys, so let's go back to my question. Where does the money come from to grow the economy? If it's not going to come from more businesses and more jobs, and it's not going to come from foreign investment, where is the money going to come from? Where's it going to come from? Where can it come from? It can only come from two places. They can either print more, or it can come from a thing called a taxpayer. Let's quickly have a look at what the taxpayer situation is in South Africa. I draw these stats just now before I got here, after the budget speech yesterday. Okay? Right now, current live stats. There's 13% of South Africans that are registered income taxpayers. But that doesn't mean that 13% of the income of the population pay tax. This is the shocker. Only 3.3 million South Africans pay tax. Now, how many South Africans do we have? What's our population size here in South Africa? 54 million. 3.3 million people pay tax. And you guys will see that this pie chart says the poor, people who earn below 70,000 a year, that's how much they pay in tax. You see that zero over there? You see there's no pie. The middle income, people between 70,000 and 500,000 a year, not per month, paid 36% of all the tax. Now, people that earn more than R500,000 a year, that's qualified as being rich, paid 64% of all the tax last year. And that represents, ladies and gentlemen, a population of 860,000 people. In other words, you and me, sitting here, 860,000 people paid 64% of all the tax in South Africa. Isn't that fascinating? Isn't that fascinating? How is this economy going to grow? Now, I hope I'm wrong. I'm not trying to be a prophet of doom, but I believe in being a realist. We have to ask ourselves these questions. How is this economy of ours going to grow? Now, I don't have a crystal ball. I can't tell you where the rand's going to head to. I can't tell you whether it is going to be all doom and gloom. I can't tell you that. All I can tell you is the amount of companies that we have are shrinking, our foreign investment is leaving the country, and our unemployment is skyrocketing. This was a graph taken in 2012. We're sitting at 25%. We are now this year going to crack 27% in unemployment. I can't see the economic markets changing. Can anybody see any major projects or any big things that can possibly turn the economy around? Please give me some good news, because I don't want this to be true. I don't want this to be true. What can you see that can potentially happen in South Africa that can change all of this? There's got to be something. Maybe our new Minister of Finance is going to stabilize things a bit, but is he going to be able to turn it around, change the graph? There's got to be more money from somewhere. So when I saw this last year, it disturbed me deeply. And I'm sure it's disturbing you right now. And I came to a few conclusions. And my conclusions were as follows. That if your investments and your money is in rand, you're getting poorer every single year. You're getting poorer. Because I can't find an investment in South Africa that's beating 47%. The second thing I realized is that it's almost impossible to beat the depreciation of the rand, unless you've got a super high yielding. And in fact, I think the only investment vehicles that can beat this is a business. So some of us have got very profitable businesses, and our return on capital employed is greater than 47%. So for those of us who run those kinds of companies, good for us. But it's still not great news. I then realized it will probably get worse in South Africa before it gets better. I hope I'm wrong. I really do. So the first thing I realized, we've got to move our money into hard currency now, before we take another 20 or 30 or 40% hit this year, 2016. So that's when I woke up and I decided I better do something. I also realized we better start earning in hard currency, because earning in rands is fine as long as you're living here. But if you want to create meaningful wealth globally, every year, every rand is worth less. So it makes sense to start earning in hard currency. Wouldn't you guys agree? But the question is, how do you do all of this? How do you do all of this? Where do you go? What do you invest in? So let's have a quick little debate here. What do you guys think we should invest in? Where should we invest our money, and how should we earn in hard currency? Who's got some ideas? What should we invest in?
Put your money in an offshore account.
Okay, good. So we can put money in an offshore account, right? Very nice. So my mom, for example, so I just forced her to cash out a bloody old mutual policy, and we're putting it in the Isle of Man. 0 interest. And I could care less, because she's going to make 25 or 30% a year compared to the rand declining. So you're quite right. That's one of the solutions. What else should we do, and could we do?
Property, overseas.
Overseas property, right. So let's decide we want to go and buy property in the UK. Does anybody know the UK property market? What's a little apartment going to cost you? A nice little apartment. Kai, you should know this. Big property guy. What's a little apartment in the UK going to cost you?
500, 600,000 sterling.
So 500-600k sterling, right? Now that's not too bad, is it? That's not too bad. Surely that's doable. Yeah, no worries. Here's my 30 million. I'm buying a little apartment, right, that you can't swing a cat in. So international property is an awesome idea, but out of reach for most of us. Would you guys agree with that? So if not international property, what do we do? Where do we put our money? And how do we start earning in hard currency? Can you guys see the conundrum? Now, so these two questions bugged me. This is what plagued me the whole of last year. What do we do with our money in current investments, and how do we start earning in hard currency? So let's deal with the first question. How can you take your money legally out of South Africa, and where should you put it? Who's got some answers? Who's already got a solution for that? Who's doing this already? Where should you take it to? So you probably want to take it to a tax haven like a company like Mauritius or the Portuguese islands. We found a guy that's a specialist in the Isle of Man. He's coming to address us on the 23rd. You guys must make a note. The 23rd of March. He's coming up. He specializes in setting up trusts in the Isle of Man. So we found a solution to legally take your money out of South Africa, put it there, and just put it in a shelter where it doesn't depreciate, but it still doesn't solve the earnings problem. Now, this friend of mine that told me about this opportunity I'm going to be sharing with you guys tonight solves the earnings problem, and that's the one that I was so skeptical about because I'm just very skeptical about things, you know. And that's what we're going to be talking about. So I then spent months and months and months to develop a system for myself. I needed to have a structure that makes sense for me. So what I developed is I developed a system for my own purposes, and I'm just sharing it with you guys tonight, that for me makes sense. And I realized that there's actually two different systems here. The first is a cash flow system, and the second is an investment system. So let me talk to you about cash flow first. Who has one primary income that the bulk of your income comes from one source? A job, a business? Okay, good. Has anybody ever owned a business that's gone bankrupt, that's gone down? It didn't work out. Has anybody ever had the good fortune of being retrenched? How good of an idea is it to rely on one income? It's extremely risky, isn't it? Because things change, you know. The company that you've been working with for 20 years goes down or starts retrenching. You don't have a job anymore. And this business that you're in, all of a sudden becomes redundant because the guys have opened up shop and you can't compete against them anymore. So having one primary source of income is risky as it is. Having a rand-based income, and there's one of it, is even more risky. Would you guys agree with me on that? So my analogy is this. I'm a big fly fisherman. I love fishing. I'm passionate about fishing, and I spend a couple of weeks a year going fly fishing all over the world. And the one place where I love to go is the Zambezi River. Now, there's a place where we fish where the river runs into the Karatbars Dam in Mozambique. And in its widest stretch, that river is about 2.5 kilometers wide. It's a massive expanse of water. Now, is it that wide throughout the entire 3,400 kilometers of the Zambezi River? Of course it's not. It's right in the beginning, in the Barotse floodplains out in Angola, it starts as tiny little trickles. How does it become this big? How does it become from a tiny little river to something that's huge? It's all the tributaries that run into it, isn't it? So over here, you've got a beautiful picture of where the Chobe River runs into the Zambezi, and you can see it's broader because those two rivers are merged. So my system that I developed utilizes a few different cash flow systems so that when we have to start investing, you can't invest money that you don't have. So one of the reasons most people never become investors is because they never have enough money to invest in the first place, especially not euros, dollars, or pounds, right? Because our South American rands is not worth anything. So the first system that we have to figure out a solution for is how do we build a system that provides multiple streams of income to protect us from the risk of relying on one source of income. Does this sound sensible so far? Sound about right? Okay, cool. Now let's assume you crack this code. Let's assume you develop a way to earn multiple different hard currency income streams. Now what you do is you're ready to develop your own gold field because you can now start investing. You have money to invest. So the cash flow system feeds the investment system. See, it's very important that we understand there are two different things because most people are obsessed about cash flow, but they never get to investing. In fact, what do most people do when they start earning more? Spending. They start spending more. They start buying bloody mountain bikes. Okay? That's what we start doing. And bigger cars and bigger houses. And what do? We just make ourselves more and more broke. So most people never start investing. When their income rises, so does their lifestyle. And that's a recipe for disaster because you never build up reserves, you never invest. So our strategy here at Margo Larvis is we want to start building up very lucrative, hard currency-based income streams, and then we want to become smart investors. We want to start investing into assets that protect us from the depreciating rand, that's in areas that can grow, and in areas that's liquid. Now, why is liquidity important? And I'm using an investment term here. Why is liquidity important right now with the markets the way it is when it comes to investments? Think about it. Why do you want your money liquid? I'm going to show you guys a video in a while that's going to tell you what's going to go on in the global economy. And to have all of your cash tied up in assets that's not liquid, like for example very expensive properties, is a super bad idea right now, okay? So what we do is the following. We've created income streams. The one is a gold network. We're going to be talking about that, where you can earn superb, outstanding returns. And then we've got an industry called Bitcoin, which we also invest in, and Bitcoin mines very lucrative. And I'll talk to you about Bitcoin at a later stage, but that just gives you a big picture. When we now make money, and we put our primary earnings, our savings into this investment pool, what do we invest in? There's really at this point 3 different asset classes that we invest in. The first is, we simply convert rands into euro. Okay? And the second thing we do is we convert rands into gold, because money always flows to gold when markets start struggling. You can go over the last 200 years, and when the stock markets start becoming tumultuous as they are right now, money flows to gold. Stock markets do this, gold and silver does that. It's repeated throughout history, and it will happen again. And right now gold is dirt cheap. And the third thing we invest in is Bitcoin. Now, who knows what a Bitcoin is? A Bitcoin is virtual currency, it's virtual gold. In the start of this year, Kai and I invested, what did we buy Bitcoins at? $380? $380 2 days ago, $450 for one freaking Bitcoin. It's a currency that's 6 years old. Okay, have you ever in your life, can you imagine? All right, so that Bitcoin industry is just running away. It's fantastic. Now I'm going to tell you guys about that in our level 2 training. Tonight's about gold. So this is really kind of our overview. This is our strategy when it comes to investment. So tonight, what I'm going to do is I'm only going to focus on one cash flow stream because it's very lucrative, and it's also a methodology to invest because we want to invest in gold. Okay, so that's what we're going to be talking about tonight. So there's a couple of principles here. Move your money from South Africa into hard currency where it's protected against the falling rand. Invest in cash flow generating projects. So some of your investments goes into projects that generates cash and generates cash flow in hard currency. And with your capital, personal savings, yields from cash flow projects, invest into investment pool, and we invest into gold and silver as well, gold and Bitcoin and cash. So that's simple. That doesn't seem very complicated, right? I mean, even a guy that passed matric on 47% math on standard grade can understand this. Okay. Why is gold such a valuable and profound investment opportunity? What is it about gold that makes it such an incredible investment? And what makes it an investment that protects itself, and that's the oldest form of exchange over the last 6,000 years? So you guys are in for a real treat. I'm going to play you a video by a guy called Mike Maloney, and he is the world's foremost expert when it comes to precious metals investments, gold and silver. In fact, he wrote the #1 best-selling book in the world on gold and silver, and you're going to see him. And it's an amazing video, and it goes through an entire system of why gold and silver, but it's also going to tell you why paper money is fast becoming worthless. I don't know if you guys know this, but the United States dollar is taking a crash at the moment, and China has issued a statement, a formal statement to all of their banks, where Chinese banks are not allowed to hold US dollars anymore. And China last year, in November alone, bought $56 billion worth of gold. And guess what they're doing with the gold? They're busy molding it into coins. So I showed Kai an article on this the other day. China's moving away from paper money back to gold. And in this video, you guys are going to see why. So I'm going to put it on and prepare yourself for a wild and wonderful ride into the world of gold and precious metals.